Well, welcome everyone. Thank you for joining today. Take a quick moment and share in the chat where you are viewing from. Get the chat alive would be awesome. City and state would be phenomenal. Love to hear from you. And we'll get going in just a moment. Welcome everyone. Thank you for joining today. Okay, let's go ahead and do this. All right, so we're here. How do some PMCs get rich? Some do not. So the objective today is to turn your PM business into a wealth building machine. So I've got about 45 minutes of material here, step-by-step information for you, and then I'll leave about 15 minutes at the end for a Q&A. So, hey, welcome Rusty, San Diego, beautiful, beautiful city of San Diego. Used to live there, great place. So welcome. So here we go. And I'll try to keep an eye on the chat as well. And I may not be amazing at that, but I will do the best I can to keep an eye on that. So Denver, Colorado, man, I've got some property up there. It's another beautiful place. I'm not too far from Denver. So Lewis, nice to have you in. All right. Do you ever feel stuck managing properties while watching other property managers build wealth and wonder what they're doing differently? Or have you ever noticed that it's easier to get stuck in business than it is to get started in business? Over the last 15 years, from owning a PM company, scaling into multiple markets, into a national merger, and then selling the PM company, and then scaling it back to just my rental properties as a management company, I took an approach over those years to acquire assets that make money beyond the management company, to never only be reliant upon one single source of income. That was always the objective. And these assets now make thousands per month and millions in net worth, but I don't want financial success to take you years because it can be done much faster. That's why I've created a step-by-step formula here to help property management professionals like you accelerate your journey to financial freedom. And we've all been told the classic American dream script, and it goes something like this. In order to become wealthy, you've got to go to college, get a degree, land a good job, work your butt off, save 10%, invest another 10%, and voila. By the time you're 65, you're sipping margaritas on the beach, not worrying about money. It's like a financial fairy tale we've all told and we've all heard, and although it's not entirely wrong, in my opinion, it's a really slow way of doing it and achieving financial freedom. Because when you finally have the money, you're almost too old to enjoy it, and you've run out of the most important asset you have, and you're at the end, which is time. So after 15 years of going from broke, living paycheck to paycheck, and really amassing a net worth of multi-millions and cash flowing real estate, mostly, almost entirely from my property management business, and then starting other businesses around that, I want to guide you through this framework to accelerate generating wealth in your life. So let me ask you this. Are you tired of working endless hours just to keep your property management business afloat? Do you lie awake at night worrying about inconsistent income, rising expenses, and whether your business will provide the financial freedom that you have dreamed of? And maybe you've seen others in the industry build wealth through smart investments, diversifying their income streams and creating businesses that run without them. Meanwhile, you're stuck juggling tenants and maintenance calls and slim margins, wondering what you're missing. And the truth is, the pain of feeling trapped by your business isn't just about money. It's about opportunities you're losing out on, the freedom to spend time with your family and the peace of mind that comes with financial freedom and the legacy you want to leave behind. Welcome, Sherry from Missoula. Beautiful place. I love fly fishing up there. It's great. Yet, here's the beauty of what you do. Property management is the gateway drug to real estate investing. And I'll take it a step further and say it's the gateway drug to building substantial wealth. We also have one of the most desirable business models, which is recurring revenue that is contractual. And we have the first-hand account to real estate deals at our fingertips. We know exactly how they run, how they operate, what numbers look like, and have the opportunity to buy them if we know how. Did you know survey after survey says the number one fear people have is running out of money before they die? They fear running out of money more than they fear dying. And we often hear the rich get richer and the poor get poorer. But have you ever really stopped to think about why that is? Are there principles that make the rich different? I've spent a lot of time thinking about this. And yes, it boils down to core beliefs that filter their very decisions and what they view the purpose of money is. So here's really the strategy. It really has three parts. Number one is find money, and it's right below your nose. You cannot build a solid home without building a strong foundation. And in order to build generational wealth, we need to build a rock solid financial foundation. Number two is grow your money and focus your time on what actually moves the needle forward. Do more with the business you have and stop trading your time for money. And number three is turning what you've worked so hard on into legacy or generational wealth. So most PMCs, they have financial worries. They worry about money. They worry about building more doors and growing the door count. They desire to do better, but not that much better. They think they're serious about getting rich, but they're only curious about it because when they find out what it takes to get rich, they've not really interested in doing it once they find out what it takes. They don't have they don't have the freedom to fire bad clients. They have operational struggles. Most PMCs feel overwhelmed by the daily operations. They constantly have pressures that lead to poor decision making and lack of planning for the future. Stand by, guys. I've got a little technical difficulty on my side. Reset my display here. Okay. All right. They also feel that they can never get away. They're tied down by the business. They're dependent upon the income of the business. And if they lost that income, it would be a catastrophe. And they also fear losing clients, even the bad ones. Only bulletproof PMCs have stable and reliable income streams to live the life they want without constant financial worry. They have predictable financial flywheels that make money while they sleep. They have a profitable and scalable business. They have peace of mind. They understand the value of buying back their time. So settle in with me if you're a property management company owner trying to make a bigger impact while enjoying consistent income. You're an excellent property manager, but making money and building wealth isn't really your strong suit. You know you're amazing at what you do, but you're still waiting for the rest of the world to see it as yourself as the go-to expert in your market. You want to work less, earn more, and build a business that flows in alignment with your values. You don't want to work in your business every day to build a successful business. You value generating real results and truly helping people. And you want to build a profitable lifestyle without taking years and years to do it. And maybe that doesn't hit home. So if that doesn't, don't stick around. It's no big deal to me. You have, and if that is, you have, or you are happy with the status quo in your life and your business, you like consuming information but are afraid to take any messy action. You're not serious about growing your income, wealth, and impact. You think being a low-cost leader in your market is the ticket to success. You think the only way to build your PM business is to grow your door count. You think you know everything about PM success. And you'll get upset when I deliver 45 minutes of detailed strategy that helped me make several seven figures in revenue and complain when I have an exclusive offer at the end. So I want to walk you through a few of the paradigm shifts that changed my life forever. You see, I started like so many of us do. I went to college and I went to flight school, got a great job, but I was buried in debt while starting a property management business and having my first child at the same time. My wife and I knew that if we stayed on that path, it was going to be filled with pain and heartache for a long term, or we could just make some sacrifices at the beginning to make a life we truly wanted. And luckily, I had people in my circle that helped mentor me to understand how money works. At first, I learned the purpose of money. My mindset went from poor to middle class to rich. You see, the poor, they think the purpose of money is to pay their bills. And that's the purpose of their job, is just to pay bills. The middle class, they think the purpose of money is to pay their bills on time so they can build and maintain credit, so they can buy things they can't afford to pay cash for to impress people they don't even care about or that don't even care about them. And that is very common in our industry, especially in the sales world. We've got to have a nice car because it might make me look like a more successful salesperson, right? Or a real estate salesperson. And that is a middle class way of thinking. But the rich, they know the purpose of money is to make more money and ultimately free their time. You see, they plant the seed of money and the money starts having babies. They never touch the seed. They only use the babies to make more babies. And I think this iterates that really well. Any fool can count the number of seeds in an apple, but only God can count all the apples in one seed. That is a perfect expression in the strength of multiplication. But the reality is that when you view money in the correct purpose, it changes everything. So the next paradigm shift that changed in my life was that the people that have it aren't smarter than you, but they took more risks, they failed more, they moved faster. See, I used to think that people that had money, they were born into it, or maybe they married into it, but the reality is they just took more risks and they moved faster than I was able to move myself. The next one is time is not money. Yeah, we hear this all the time, especially as young people, that we got to go get a job, and that's, time is money. We got to trade our time for money. And time is infinitely more valuable than money. I hate that we trade time for money so much. But let me give an example. If I were to write you a check for $1 million, but in order to cash that check, you would die in 24 hours, would you take it? Of course you wouldn't, because time is infinitely more valuable than money. What if you have $100 million, but you were just diagnosed with cancer and the only cure was not covered by insurance and it would cost you $100 million? Otherwise, you would die. Would you pay for it? Of course you would. You'd write the check right now to live and give all the money away in order to survive. And then the next paradigm shift that really changed my mind was that you need money to make money. And that is so absolutely untrue. No, you need a high-valued skill. Like many of you are sitting on a mountain of equity in their house, and that money is just sitting there, not invested. Utilizing a high-value skill to use that money is an example of having that skill. The next one, the last paradigm shift that I'll mention today. If you live a life by design, or if you don't live a life by design, you will live a life by default. This took me a long time. It's easy to get caught in the trap of just going through life. But the reality is when that shifts and you live with a purpose, it changes everything. All right, here's some business paradigm shifts that changed my life. My service is worth what I believe it is worth. So if I provide a value and I don't get paid for that value, then that's what I think that service is worth. It's worth nothing. I had a mentor tell me one time, you can't out Walmart Walmart. What does that mean? Well, how does Target exist? Well, Target does it with nicer stores, better customer service, and oftentimes better products. Who tried to out Walmart Walmart? Well, Kmart. And we can see what that got them. And they became, so the point is really not becoming the low-cost leader. It's far too risky of a proposition. And I know what you guys are thinking. If I raise my prices, won't people leave? But my competitors, often I hear, but my competitors charge this and that, and I can't charge more than that or I'll lose business. And I'm here to tell you from experience, that is completely false. I've done multiple fee increases, value increases throughout my portfolios in the past, and rarely does anybody ever leave because of that. And it is such a minute thing. We build up the fear a lot greater than it truly is. The next, that not all business is good business. Keep it simple. Let me just say that I'm willing to bet most portfolios managed professionally that the bottom third of that portfolio actually cost you money to manage. They are the ones that spend the most time in maintenance and phone calls and just massaging their issues, their needs, if you will, and they cost you more than what you actually make in the business. Next is, if the business isn't profitable and creating value, it shouldn't exist. But, and it's a big but, value has to come first, because if you focus on making money, then you'll provide neither value or profit. So provide the most value possible and the profit comes. So just a quick reminder, we do have a Q&A at the end. So if you've got any questions, feel free to put them in the chat, and I will also save some time here at the end to go over those. So I'd love to answer any questions regarding today. All right, here's the journey. So 8 months ago now, I started doing some research, and I found that we in the property management space are no different than the general public in our financial means. Somewhere between 66 and 78% of Americans, thus PMCs, live paycheck to paycheck. Many are making decent money, like great money in this business, but aren't doing anything to grow it and live right up to their means. I also found that most people have little to no financial goals. It's often, I want to be able to step back from the business one day. That's the goal. I often hear, I want to step back from the business one day, or I'd like to travel a few times a year, but it's almost never backed up with intentionality. And they think the entire nest egg should be in their business. Like everything I earn should be in my one singular business. But I have to ask this, I'm in aviation, so why do most commercial airliners, almost all I can think of, have more than one engine? Like, for instance, why does the Airbus 380 have 4 engines? It's because if one goes out, they're still flying. If 2 goes out, they're still flying. That's the point of multiple streams of income. And how about a goal like this? I want to make so much money that money becomes irrelevant, and time is my primary focus. And I don't think people commit enough focus on time, and it is completely fleeting. So, about me, I grew up in very humble beginnings. I grew up in a small single-wide trailer until I was about 5, and then lived out in the country in a small town until I was 13. Then I went to college, went to flight school, got engaged, both of us came to the marriage with tons of bad debt, the houses and the student loans and all the things. Student loans aren't necessarily, it was an investment, right? But we followed a plan to get out of that and not be buried by living paycheck to paycheck anymore. That was the goal. And we didn't want that when we started a marriage. So we started a business while I was working as a helicopter pilot, sold the first business and started a PM company. It became our mission to build wealth. And every opportunity we had, we utilized the management company to use those profits to build more and more wealth. Went from being like every other property management company in our market, providing the same services for the same fees. We just answered the phone better than anyone else, and that's why we grew. But we decided that our services were worth more and started charging accordingly. We started buying rental properties from our clients. The first one, we paid zero money down for it. Grew the business into 2 markets. And then we did a multi-state merger. And then we sold that PM company. We went from 0 to 620 doors, then multi-state merger to 1,200 doors, did some acquisitions, sold that company, and I had the choice to retire at 39. That's why I made it my life mission to share this strategy that changed my business and my life into this masterclass. It drives me crazy that rich people get rich silently and they don't say anything about it. So one thing that we were able to accomplish is we went from, this was, 8 years ago or so, but almost 10 years ago, I guess now, went from $125 of revenue per unit to $275 revenue per unit. All of our competitors stayed at one singular management fee, which was the management fee, no leasing fee, no referral fees, nothing additional to the management fee. Even tenant fees were given back to the client. But we changed that completely in our marketplace. We increased our profit per unit by 32% while refining our portfolio, trimming out the properties that cost us money. And now have acquired 43 cash flowing Class B properties. We own solely and have an additional 395 doors with partners. Started investing in more businesses and have scaled our net worth to decamillions. That's kind of our journey there. After this training, you will have the exact roadmap I used. So I want you to imagine where you could be 1 year from now, because your success is inevitable. So what you need to know. So first, step 1, find money in your life and your portfolio. Lay the financial foundation. A business simply is not a business without profit. Your brand, your marketing, none of this matters if your business is not making money. The purpose of the PMC generational wealth format or framework is to build a rock solid financial foundation where you know exactly what levers you need to pull to make more money than you've ever thought possible. It starts with knowing your numbers. Know your P&L and your balance sheet. Think of your P&L as your business report card. It shows how much money your business earned, revenue, and spent expenses during a specific time, like a month or a year. Revenue is money in. This is the total money your business made from selling your services. Think of it as your allowance or money you earned. Expenses, obviously, is money out. This includes everything you spend money on your business for it to run, like buying supplies, paying rent, paying employees, and so on. And then what is left over is the profit. After subtracting your expenses from your revenue, what's left is your profit. If it's positive, great, you made money. If it's negative, it's a loss, meaning you spent more than you earned. You've got to fix that. We all know that most of us never examine our P&L. So we might kind of brief it or glance at it from time to time, but spend 10 minutes diving into it because it's important to show whether your business is making or losing money. And it helps you decide if you need to sell more, cut costs, or find new ways to grow. All right, the balance sheet is like a snapshot of what your business owes, and is worth at the moment. It's really assets, what you own, liabilities, what you owe, and the equity or the net worth of the business. Why is this important? The balance sheet helps you see if your business is financially healthy. It shows whether you have enough to cover what you owe and helps you plan for big decisions like borrowing or buying new equipment. Why every business owner needs to know this. Understanding your P&L and your balance sheet helps you track progress, make better decisions, plan for the future. It helps you speak the language of business, communicates confidently with investors, accountants, and lenders. In short, your P&L shows your business is doing day to day, and your balance sheet shows how your business is doing overall. They're your financial GPSs, so you gotta have an idea of that. The next one, let me just briefly on this, but you gotta know your revenue per unit. In the webinar sign up, I asked what profit per unit everybody's doors were, and most people, about 90% of the answers were, I don't know. And I know that's common in our space, but this is probably one of the most important things you can know as a business owner. The next one is the direct labor efficiency. This is your PM revenue divided by your direct labor. Number one lever that we have to pull in our businesses and to guide efficiencies is because it's our biggest expense. Really, the target for our direct labor efficiency ratio is 3.5. So some of us today are aren't spending any money on our DLER, and you think that that's the right path because you're the sole person. You're doing everything, and that's the work that's being done. But I want to remind you that in order to have a business that thrives beyond yourself, if you're the go-to person, then that business is 100% reliant upon you. You should look for ways to buy back your time so you can buy up your time. And if you really want to level up your business, free up your time. Ask yourself if what I am doing is adding value to my business, or is this a task that isn't necessary or should be given to somebody else? If you took an audit of your time, of everything you did in 15-minute increments over the course of the last month, how much of what you do is actually contributing to the success of your business, or is it just things that have to get done, but somebody else could be doing it? I can't think of a single thing that has elevated my businesses more than the time that I have allowed myself to free up by shifting or transferring that time and those tasks to somebody else. So can you imagine hiring a chef to cut your lawn, someone to do your grocery shopping, or someone to clean your pool, or do all of the admin tasks in your business and get those off of your plate? When you free this time up, you open a mountain of mental bandwidth. The stress level goes out the window. And what about this? Like, if you died tomorrow and you're the sole operator, what would that do to your spouse, your loved ones? Because the business has got to operate, has got to move on, or would it just go away? Or what if you got sued and your business was the only source of income, like a premise liability lawsuit or a carbon monoxide poisoning? That is some serious stuff that I've heard several people in our industry go through, that it completely wrecked them financially. That's why we should really focus on additional streams of income. So, I get this question a lot. When do I pay myself? Here's my formula that I have found to be really effective is, first of all, you take the profits and you establish an emergency fund. 3 to 6 months of expenses saved. Then you draw a market salary. You set a budget for reinvestment of profits into the business. You should have a good idea of what levers you could pull to grow the business and marketing and reinvest that money into the business. And then take the profits as distributions. This is the money that you can snowball over and over again. Personal financial foundation here. Create financial goals and think very big. Have a budget. Calculate your net worth. You should know your net worth. Establish an emergency fund on your personal side as well. Reduce debt. 35 or less is the rule of thumb. Avoid bad debt at all costs. Avoid bad debt. And did you know that 70 to 75% of all luxury vehicles are actually leased? That is a bad debt scenario, a bad financial decision most of the time. And then increase your income, or your debt to income ratio should be reduced as well. So next, grow your income. If you haven't raised your prices in the last 6 to 12 months, then you are already behind. Our market, our economy is very fluctuating or volatile, if you will. And inflation happens month after month, year after year, and we've got to keep up with it. And I know in the PM space, well, we capture that by taking a percentage of management fees. The reality is that's just one of many, many, many fees that we can generate income through and create value with to our clients. And so if you haven't raised your prices in the last 6 months, do so now. Like, don't wait any longer. Grow income by creating a PMC that delivers extreme value and is compensated accordingly. You should know your marketplace, not to compete at their prices, but to know how to overcome the objectives. How many of you have ever had ever called your competitor and asked them all the questions a landlord is looking for to get answered? Like, shop your competition, ask or add value and ask for more. Another step is to prune your portfolio. Again, about a bottom third on average of what I have seen is actually losing you money or costing you to manage those. So get rid of those properties that consume your time and your effort. And then benchmark new properties to make sure that you're only taking on new clients in that fit your profit in the future. And then the cherry on top is to build legacy or generational wealth. You have to fuel the factory. Invest in property management first by building or by investing in the business itself, and then create multiple streams of income. How do we find cash flowing properties, not only outside our management, but also inside our portfolio, and build multiple streams? Maybe it is buying an ancillary business that supports your core business like property management. So like a service, HVAC, cleaning, handyman service, so common in our space. Those are great additional streams of income that feed each other. And then generate wealth, build long-term, sustainable wealth that can be passed down through generations. How many of you do this? When a client informs you that they want to sell their rental property, you immediately start trying to capture the sales lead or get bummed about losing the door under management. Instead, why aren't you looking for the opportunity to buy the property from your client? This is the beautiful thing about property management. It creates the marketplace for off-market deals from a seller that already knows, likes, and trusts you. You have firsthand knowledge of the property. And beyond that, it's an opportunity to negotiate favorable terms with creative financing. Real estate investing is the low-hanging fruit here that we have as property managers, but it's a high growth potential fruit waiting to grow your net worth. So let me further explain the wealth potential of owning real estate beyond just managing the properties. And I don't say just in a small thing. I know how difficult it is to manage properties. But at the very least, you should be able to repeat this to any client you have that doesn't understand the value that they have in their investment property. So here are the 5 ways real estate pays you money when you own them, when you own the asset. Number 1 is cash flow. That's the profit from the rent minus the expenses. So the profit. Number 2 is appreciation. We all understand what appreciation is. Number 3, often forgotten about, but loan pay down. The tenant is paying the rent and thus paying down the mortgage, which is growing your equity. The tax savings, depreciation, cost segregation, writing off the interest, so on. Reducing your tax liability well below the standard payroll or dividend tax liability rates. Most people that pay very minimal or almost no taxes own real estate, and the real estate is a vehicle. I don't know why our tax code is written the way it is, but it is written heavily favorable in ownership of real estate. And last but not least is inflationary hedge. Seriously, if you have never looked into how owning rental properties far outpaces inflation, you are really missing out. It is massively different. Rent increases to property value increases far outpaces inflation year after year. And I see this one as one of the biggest misses I see in our industry. And we're all about the short-term, immediate pops in income, but we don't look to the future of how our money can substantially explode into more. So I'm going to go through a few scenarios here, but I wanted to show you compounding interest. So we're going to go over a couple slides, and I want you to see kind of how this lays out, because I think a lot of people don't pay attention really to the strength here. So I'm going to use a couple extreme scenarios and drive it back home into real estate. But so say I was 20 years old, I wish, but I'm 20 years old, I'm single, and I'm working, and I get $2,500 a month, and I could live all off of that. But I've got time too. When I'm young, I've got time and energy. So I'm going to get a second job, and that second job, I'm going to invest every penny that I make every single month into an S&P 500 fund of 2,500. So an additional 2,500. I'm going to make an initial investment of 2,500 and a monthly investment of 2,500. And I'm going to do that until I'm 75 years old. And I just want, this is extreme, obviously, maybe not the scenario that's going to happen, but the average S&P 500 is about 10%. And I want you to see what the time value here of money is. So as you can see, $2,500 a month for 55 years turns into $57 million. That is massive money. But this is the really cool thing, is that $2,500 monthly for 55 years only equated for $1.652 million. The rest of the wealth, the 54 million, was based off of compounding interest. That is huge. I want to show the next scenario here is that if we had to play catch up, and let's say I am older now and I have some money in the bank, and I'm going to make I'm 55, I'm going to make $100,000 initial investment, and then I'm going to invest $10,000 every single month because I'm making more money, and I'm going to do that for 20 years. So I'm 55, that'll make me 75 at the end of this at the same interest rate, and I'll show you that it has a substantial difference in the time value here. So I will have contributed $2.5 million and have grown a nest egg of almost 8 million, so 7.5. That is a huge difference in smaller amount over a longer amount of time. And let's just put the IRR into perspective of owning real estate, the internal rate of revenue here, or return, excuse me. So if I had a rental property and I'm going to put $40,000 down and I'm going to put $0 monthly into that, hopefully this is a good, clear scenario, but we do have to reinvest in rental properties. But I want to just show you $40,000 down, how that money can turn over in time. I'm going to own this rental property for 30 years. And the average IRR in the United States is 10 to 20. So let's split it in half, 15% IRR, or compounding interest, if you will. Check that out. For one property invested of $40,000, I only invest 40 grand. It turns into $2.65 million. That is a huge rate of return, even better than our drastic scenario of $2,500 a month for 55 years. Wanted to show that huge potential because it really, really is huge. And we got to capture it, right? Compounding interest with real estate is super powerful. Okay, moving on. So the approach here is really to create a systemized approach that when your client is ready to sell their investment property, they know exactly where to sell it and that you are ready and poised to buy it from them. And then you should have on your mind creative finance. They, again, know, like, and trust you. And if you listen to why they want to sell, they might tell you that there's a pain in their life and that they need that pain to be solved. And oftentimes, and I've done this dozens and dozens of times, bought properties while solving a pain for my client with zero money down or a zero interest owner financing loan over and over again. I know people, oh my gosh, I can't believe you would experience that. I've done it so many times that it's just become normal-place. Even after selling the management company and just having my own portfolio, I've had former clients, probably about 7 of them, call me and ask if I would like to buy their property because we had the systems in place in our management company in order to make this effective. So, let me just talk briefly onto the first cash flowing property. And once you have this system in place, it's a rinse and repeat, a system that creates a flywheel. So my first investment property was within the first year of owning my management company. If you remember me saying I was broke, I had no money at the time. So I certainly didn't have a down payment and I certainly didn't have money to do the rehab that was needed. The client came to us as a landlord rescue. They lived out of state. They made a deal with the tenant, and that tenant wasn't really paying rent on time, but the deal was that the tenant was supposed to maintain the property in exchange for lower rent, and the client got neither, right? They weren't maintaining the property, and they weren't paying the rent. So they came to us, and they were like, I don't even want the property. We've moved on. We'd like to sell it. And we said, well, I'd like to buy it. Now, client, can you hold that property? I don't have money to put down on this, but what I can do for you is get this stress off your plate. I will take over the mortgage and make sure that that mortgage gets paid every single month for you, back to you, if you will. And we're going to get rid of the tenant. You don't have to deal with that. And then we're going to rehab the property and you don't have to deal with that either because there's lots of damage that the tenant had caused. Well, again, I didn't have the money to put into the rehab. So I went to my dad and I said, Dad, I've got an opportunity to buy a property. I estimate that it cost about $15,000. This was 12 years ago, by the way. $15,000 to rehab it. Probably costs $35 now. And, but I don't have the 15 grand. Can I borrow it from you? And in 1 year, I'll pay you 16 grand. That was a 6.67% interest rate for 1 year. Okay. But I knew something. I knew that if I kept the property and owner deeded over to me, that is actually considered as a refinance when I'm going to go get lending from a traditional bank instead of a traditional loan or a Fannie, Freddie, or FHA, whatever type of loan. That's different because if I went to the bank and I asked them for money right out the get-go, I'm going to have 20% down, which I didn't have. So that's an important factor. So I knew that if I can season the property long enough, it becomes a refinance instead of a new home purchase. And then I could take the equity spread. Remember, I'm rehabbing this property, and I knew that the value of the property today was X, But if I did the rehab, it would be Y. And I knew that if I can get that at a 80% lending rate, then I could take additional money out and snowball that money into the next one. And that's exactly what we did. 6 months. We seasoned that. It took us 3 months to rehab that. We seasoned it for 6. We paid off the seller and my dad within 6 months, far sooner, if you will, than the 1-year term that we had. And everybody got made whole. They made money. We made money. And I still own that rental property today. How do we shift this now into a legacy format? Well, if you look at this chart, this is my actual flow chart that I keep for myself. It's purposely blurry, but at the top, that dark blue bubble, if you will, is our revocable living trust. We don't own anything as individuals. My wife doesn't, I don't. Everything is owned by our revocable trust. A revocable trust is much stronger than a will. And if something is owned by a revocable trust, probate gets avoided. We don't have to go through the probate process, or my heirs don't have to be specific. And then each one of those light blue bubbles below the dark blue one are LLCs. Every single property or business, obviously, that we have is held in an entity. Why do we do that? Because it is liability avoidance or protection, if you will. So if I have a tenant that slips and falls or dies from a carbon monoxide leak or something, heaven forbid, I hope that never happens. But if I do, then they can sue that singular asset and not go after the entire portfolio. So long, there's a little asterisk, so long as I'm doing my filing requirements, that prevents the corporate veil from being pierced, okay? Then if you go under that, under the light blue is the kind of orangish or peach colored diamonds, if you will. Those are just the addresses, so I could keep track of what LLC owns which property or entity asset. We keep a very simple naming convention. The naming convention is, if it's 123 Main Street, then it's 123 Main Street LLC. And that's how we do that. Super simple. If that LLC is already taken in your state, it's easy to just slightly change it a little bit. And then at the bottom, the green and whatnot are other business entities plus other investment realms, properties that we own with partners. So instead of listing all the individual assets under them, they get convoluted, and I keep it simple under there. But I wanted you to show that because the purpose of this is to set it up in a legacy format where if my wife and I passed away, my kids or my heirs are taken care of. And there are things that you can do. My kids are young. They're almost teenage. One of them's a teenager. The other one's about to be a teenager. That requires them to be financially literate before they get this chunk of assets or a chunk of money, if you will. And that is important because anybody that falls into money fast loses it just as fast. And we don't want that, right? We want this to be a legacy and a generational to be passed on over and over again. Okay, so this proven method, not just theory. I've tested this, proven it. I've walked clients through this numerous times, have had tons of success, and it works. And I have properties all over the US, and it works in each market that I've been to. My management company was in 7 different marketplaces. I worked in every single one of those. You got to be able to look at the opportunities and be optimistic instead of pessimistic, if you will. And I'm ready to share this with you guys if you're willing to look into it deeper. So the generational wealth formula or the framework here is really tested and proved. And it's the exact process I used in my personal life and business. And it's exactly how you got to this masterclass, why this is even existing today. So if you're thinking, I'm ready to start, all you have to do is commit, focus, and take action. In fact, you're already started by attending this training today. I just gave out my generational framework strategy today, but as you can imagine, what I talked about here is only the tip of the iceberg. To build a rock-solid financial foundation, methods to grow your income and find new revenue sources, and then invest in substantial cash-flowing assets, being able to negotiate and set that up into a system inside your property management company and ultimately setting that up for legacy or generational wealth. So you really have kind of two options here. You could try and do this on your own. Maybe it's not important to you, but you could try to do it. Or you can take the proven path to success. And if you decide to work with me, nothing is held back. Like everything is given through that process or through the program, if you will. No steps are held back. And it's a step-by-step roadmap that you can follow. My mission here is to really accelerate your growth, wealth, eliminate the headaches and the bad advice you often hear, and give you the exact process you need to follow to build your generational wealth on your terms. That's what you'll find inside of my generational wealth framework. And I've packaged the entire process from start to finish so you can have a rock solid financial foundation, create new revenue streams, and build wealth that grows even while you sleep. You have already mastered the base of this pyramid. Now, let's get you to the top of this pyramid. Why? Because the biggest problem I see in the property management space is that there are lots of programs out there, and each one of them only teaches a single piece of the puzzle. But a program on how to charge more fees isn't useful if you or your business are living outside of your means, or it's not useful if profits aren't used to make more money. That's like saying you only need to raise the roof instead of shoveling out the crap after a flood. Also, other programs are useless if you don't know what the purpose of money is and how to use it to make more of it without trading time for money. You only have 24 hours in a day. You should be doing and working on only what is moving you forward. And I want to give you the best start of a successful and fulfilling life because I've been through the entire process. I have over 15 years of experience and a lot of trial and error, lots of mentors and coaches that have helped me along the way. I've been in the trenches and have really found what works long-term versus momentary trends. So ask yourself, what is the cost you have right now to not have the financial freedom or the legacy wealth that you want? Is it costing you time with your kids? How about not being able to leave the business for more than a couple of days or go on a vacation? How about missing out on opportunities, investment opportunities that come across your desk that you're not sure how to capitalize on? And let's put it this way. I want you to take a moment and write down $1 million. Spell it out. 1,000,000. And underneath that, write down your total income. Now put a minus sign and do the math. This is what it's actually costing you right now to not make $1 million. So the question is, what is it costing you to not make $1 million? That is the math. So, here's how this works. Who is this PMC generational wealth framework for? It's for business owners and entrepreneurs, people who are exceptional at what they do, have experience and expertise as PMs and know how to deliver results. People who understand that investing in themselves and their business is the best and only way to grow. People who take action and will implement the steps and the methods step by step. If this sounds like you, I'd love to invite you to a call with me and see if you are a good fit for the generational wealth framework. My team and I have reserved some times in the next day and a half, really. I'm going on a nice, extravagant fly fishing trip to a foreign country starting Thursday evening. So my full day is open. If you have the time, I'd love to speak with you and see if you're a good fit and have a free strategy session with you. Here's a few things, if you're still not sure, that my clients are saying. The insights I gained on time audits and strategic planning have made a huge difference. For example, I realized I was overpaying for a remote team member, adjusted that contract and redirected those savings to hire another part-time member who will now manage my inbox and other admin tasks. That shift alone is going to free up so much of my time to focus on growth and strategy. The guidance and support from the program have been invaluable, and I'm incredibly grateful I took the leap. It was absolutely worth the investment. So, I have put in the chat my calendar link. So it starts with meet.boomerang.com or app.com. So feel free to click that. I'd love to speak with you. I only have a few more slots of our next group mastermind through this process. So hop on quick. I'd love to have you in it. So here's a fact. I would not be where I am today if I hadn't invested in working with people who were where I wanted to be. That is one of my missions in life. I have lots of mentors and I seek them out actively. So where do you want to be a year from now? Check out that chat link in the description. I will also place it in the chat. And James, Boston, Massachusetts, thanks for joining us. Just saw your chat. Rusty, I agree. Bring it on. So here's that link if you're interested. Let's open it up to questions. Does anybody have questions? Feel free to put that into the chat. I don't think I could bring anybody live. So I wish I could, but I don't think I can. Questions? I'll stay on a few minutes. I think I hit the time mark. Shoot me a question, guys. Love to see it. Thanks, Lewis. Thanks for attending. I appreciate your time. Okay, guys, I'll give it one more minute. Man, solved all the questions. That's pretty amazing. Thank you, Rusty.